Most traders find ORB and think it's the holy grail strategy, but in 2025 and leading into 2026, something has changed. To find consistency with ORB, you need to add a few things that I have developed and applied to it myself. I love breakouts. Breakouts are one of my most favorite trades, and I've adapted the ORB in many different ways. So let's get into this video and discuss exactly the ORB version I'm using right now and how it works for me. Alright, so the first thing I want to get into is actually discuss what is an ORB so we make this clear. So we have so many different type of open range breakouts. You can measure it on different time frame. The most popular I would say is 15, but I'm going to kind of show you the main basis and how to adapt it and how to basically change ORB to make it a little bit more effective here. But essentially we're looking for the open candle here, right? So all we're looking for is basically, let's say in a 15-minute ORB, we're going to have the 15-minute at the open. What open do you say? NYSE open. Okay, so that's the New York Stock Exchange open, 9:30 a.m. Eastern, and we're looking for the first candle to close. So you can do this on 5, you can do this even like a 1-minute candle close, not that accurate, very complex. You need other things with it, but most popular is waiting for the 15-minute close, and then that creates your open range. So let's say we have a 15-minute candle that looks something like this. So this would be step number 1, is waiting for the candle to close. So this would be 9:45, right? So 9:30 to 9:45, 15-minute candle close. Then essentially you would take from the high to the low like this, you would make a box, and this would be the idea of you marking your open range. You would use the wicks here, okay? And then you are basically going to be looking for either a close above the high here of your box, which that could be on a 15-minute, which is what some people do. I'm also going to show you how you can use lower time frame. It's actually more accurate. It's more accurate than waiting for 15, or you're looking for a close below. Overall, the idea is not that bad, and if you were to backtest it, it would have like a 50% win rate, just randomly entering on 15-minute candle closes, targeting 1-to-1. The issue is stop loss is not optimized, entry is not optimized, entry is not optimal. So the overall concept of ORB is very powerful, and I'm going to show you how to use that, because breaking above a certain zone and coming below a certain zone kind of sets the tone of the day. And we can use this candle, okay, that basically gets above. We can use this candle to tell us, okay, direction might be positive for the next 30 minutes or 15 minutes. And I can trade in that direction because we've got basically a breakout. But that doesn't necessarily mean that's where your entry should be, entering on a 15-minute candle close above. And then some people run stops below the range, which if you know anything about opens, they are massive. You are wasting so much profitability by running stops below that whole open candle. So let's actually put this together and let me show you in essence how this looks. I've literally gone and marked the open range for NASDAQ here. It works on NASDAQ, high volume pairs, NASDAQ, US 30, S&P, gold people also I see it trade on, but just high volume pairs during the New York Stock Exchange open. This doesn't really work too well in London Open. I have seen people use it as London Open, but honestly, I feel like New York Stock Exchange Open is the best for this to work. So let's go break it step by step. Here's your 15-minute candle close, right? Doesn't have to, it can close bearish or bullish, doesn't matter. You take the high, you take the low, right? This is a candle that closed at 9:45 a.m. Eastern. And essentially you're looking for, okay, 15-minute candle close above. I'm going to enter breaking the high and look for that to continue. In essence here, this is what I mean. You take a trade like this, you put stop below the open range. Okay, you get 0.3 up, but it's not optimized. But there is one thing that's very true. And this is what I want to show you. And I'm going to show you a recurring pattern of how to optimize that. That candle closing bullish, once we close above the range here, and we get that open range, all we need is liquidity to prove we're going to continue in the same direction, because we've got a breakout as long as you're following higher time frame bias. Okay, this is a very important part. What do I mean by higher time frame bias? Well, let's go rewind this and see what we're talking about here. Okay, so if we go on daily time frame from this example here, we can see daily has grabbed liquidity and the previous daily closed bullish. You need to build a bias. Let me know in the comments if you want me to make an in-depth video about bias. I have other videos, but more about New York session bias. Let me know in the comments. Also leave a like if you're enjoying, definitely helps put out this free content. So when we come down here, right, and this is going to be really important going into 2026, is too many people are using the ORB and they make it simple. And yeah, you can catch small scalps, it looks good, but when you do it yourself, long-term profit and long-term growth is not going to really be possible here. Why? Otherwise, we would code an ORB bot that just follows the rules of ORB and just let it trade for us. Why do I even have to be at the charts? Obviously, no one's done that. Otherwise, they'd be multi-trillionaire unless they're lying to you, okay? So the fact is we need to adapt. We need to know what price is doing here, and price is going to follow price action, and price action is the core of where your idea needs to come from. Okay, so daily grab liquidity. That word liquidity, it's overused in our industry, but it is something important, okay? Because what it's showing you is that price basically has created a rubber band effect. I've used this a lot of times. I have a very popular video that uses, but essentially see that wick on the daily, it's gone down to give us a potential boom spring, okay? And essentially that's what it's doing right now, okay? It's grabbing liquidity to follow what? The previous daily candle. Super important. Look at what your previous daily candle did. Look at what your previous 4-hour candle did to build a bias, right? Tell the story. Price is moving up here. We're seeing daily candles close positive. This daily is rejecting. This is now building into my bias. So I can use the open range 15 minutes after to tell myself, okay, let me look for a potential entry here. So here's my range, and I can tell myself, let's see if I can get something closing out that range. Boom. Now I get something closing out that range. A lot of people talk about 1 minute open range breakout strategy. This is actually something that does somewhat work. Okay. Contrary to popular belief, you can get away once you have that higher time frame analysis, higher time frame bias, that 1 minute structure rejecting the open range and then closing above. That is a open range 1 minute scalp. You can take those entries. So what we look for here is we look for price to break structure. So bearish candles followed by a bullish candle closing above, put the stop loss below. There is a little scalp there. There is a scalp there, at least for a 1-to-1 risk to reward. I do see those be positive and work. And we can see that moves nice without any much pullbacks here. But you need to have the other stuff. That's what I mean. You need to adapt your strategy, learn more. Don't be so dumb in the markets, just trading based because one guy on the internet said to buy above a 15-minute candle high and sell below. Use that concept. It has some truth. Most concepts do, but you need to put it all together, and that's what I'm going to help you do. So stick around. So if we're looking at the ORB, I don't like the 15 wasting a lot of time when we're moving fast. But one thing I do like is I like to see clean areas to trade in. Those are my favorite areas because I don't have to worry about price rejecting this resistance, right? It doesn't have to be a question. So instead, what I'm going to look for is I'm going to look for liquidity grabs. What does that mean? Structure is my friend. I want to see the same thing you saw in 1 minute. I want to see that form on 5. I need to see a pullback. And then I need to see clean candles form. And then I can try take the buy. And that's where I'm going to get the bigger move. I'm not interested in whiplash. I'm interested in the bigger move. So let me show you that. We push up. Now we get the liquidity grab. Boom, right? This is where people try to sell. They forget about bias. They're going to get cooked. We're also respecting the top of the open range here. Now, here's where people do what? Boom, right? So here's your sellers. They come in, blah, blah, blah. Now they get faked out. Or there's people who scalp. You have to imagine. That's why trading is so confusing. Stick to one plan because there are people who could make money selling that. Right? There's people who can make money. You can't deny that. So make sure to follow your plan and don't try to put all these ideas in your head. You're going to just confuse yourself. Now, I do have a support to continue my original idea of continue up. But the problem is I'm not trading off randomness. I'm trading off what I see. And what do I see here? I see prices stuck at this. We could reject this and continue down. And I could potentially become a seller. But I can't take a trade here. So one option is I can go above the highs, which is a breakout trade when we get a close above there. That is one option. So I have structure and a breakout. Okay, so we can see that, which obviously happened, but this candle is too deep. So now everyone's panicking as usual. Panic, 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 panic. And guess what? After you panic, 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 now you FOMO at the highs. Bad idea. Do not FOMO at the highs. Wait for the pullback. Wait. If it doesn't happen, it's not your day or it's not following this plan. Liquidity grab is essential. Blah, blah. There we go. Now we get the pullback, right? Now you get your rejection candle. Once you get that rejection candle, clean area here. Now you can target. Put stop loss below, right? It's even nice if you can put it back inside of the open range. Wait for next candle to break the high. That's the entry. And then boom, you're ready to go. All right. That's the real move, right? That's the real move that you can hold and you can see it's way different. And now people are going to tell me, bro, this is just a fluke. That was why I've gone and marked every single market open from the last week. When I post this video, when I'm recording it, I've marked every single open, and we're going to go through every single open, right? To show you this concept in action. So we just covered this one to show this concept. That's the one we just covered. Now we're going to go to the next day here. So look at the size of the candle here, already too late. There's actually a way to enter on the actual open. So not open range breakout, but on the open. There's a way to enter. I like those. Those are my favorite, entering on the open. I sometimes don't wait 15 minutes after. I like to go with the open momentum, but that we can do separate. I cover those in webinars and stuff like that more in depth. But going back into this stuff, I want to show you 5-minute time frame, right? Remember what we said. We close above the open range. You saw back then the 15-minute close above the open range. Here's your open range close above. Everyone buy, break of high. Slapped in the face. See that? There's your open range breakout, buy. But they're not wrong. They're not wrong. You did have a breakout. You just didn't wait for the liquidity. So you get slapped in the face. Stop loss gets smashed. You're super sad. All you had to do is wait for this support candle here. Now we can start to party, right? So now you get a better move, right? At least this is a 1 to 2. Get back to the high. That didn't continue. Not every day it's going to continue. Also depends on bias, right? This one went even deeper before a bigger move. Totally possible. But see that concept. Push up, first one fail, support candle, rejection candle, close bullish, break of high, winning trade. Harry, that's another fluke. Let's go next day here, right? This one is very, very interesting here, right? Because this one is different. Why is it different? We are starting from a pullback phase. So what do we see here? Close above open range. Everyone buys. Maybe they don't get slapped in the face here, but they have a big stop loss, right? That's for sure. So maybe they survive this one. But what do I wait for? Pullback. Rejection candle, stop loss below rejection candle. Let's go. Right? On this day, honestly, I'm not waiting for this. I have an even better entry, tighter down here. This is a way better entry for me, and I'll be part of this big candle here. I don't even need to wait. There's a way to trade inside of the open range, and that's what you need to get more advanced in your trading and not only stick to it. But I want to give you a strategy of how to adapt your open range breakout in 2026 and even now and all. You know, this was even happening 25, 24. It's just an adaptation that's going to make it more accurate. But the crazy thing is there are people on 1 minute, 30-second charts who are taking small scalps here for 30 points. Fine, but I'm not looking for a small scalp. I have a better chance. So I'll ask you this question. I always ask people this question when I'm speaking, guys, in the group, in webinars. I always ask them when, you know, they ask the, you know, similar type scenarios. I always say this. Would it be easier to win a trade in a 35 pip push is your only chance, compared to catching a 100-point push? So if you're up on that tight on the small time frames, yeah, you can make your money in here at 35, but I'm going to have a better chance in a 100-point move to make money because I have more room. I have more things, you know, that can go wrong, and I'm not going to be hurt from it, right? So let's have a look at something going wrong. When we had the rejection candle here, and we started to buy back up, break of high, it wasn't smooth. It came multiple times, very close to the lows. So you are holding drawdown quite a few times. If you're taking a tight trade, the minute that happens, you're stopped out. So it gives us a bit of room, a bit of breathing room to what play out our idea, okay? So this one here, check this one out. This one a little bit more complex, but it keeps you safe at the end of the day. So here we get a 5-minute close above the open range. This one is a nice one. This one just actually classically pushed. This one classically pushed, gave you 50 points. You had a 50-point stop loss. Doesn't always happen. You need to analyze on the day if it's worth taking the breakout. But we do get our liquidity grab, but this time it fails, right? It fails, and we see the rejection candle happen, which is the entry confirmation. And maybe some of you are smart and already know what's the problem about this, right? So we see the rejection candle come through. It fails, gets in a bit of profit and fails, but technically you could have avoided it. I know it sounds crazy, but let me show you how. This candle pushed too deep here. It pushed too deep. We went all the way down into where? Below the open range. So now we're actually breaking structural points here. So we changed it. We need to respect that open range. So it becomes useful, right? We're using it. Now, there's another strategy. People sell below the open range breakout. Again, I see it small scalps. So we did close back in the open range. It's not enough. You're going to need more confirmations to be able to trade back through the open range. One candle won't be enough. If that happens somewhere here, like we respected here and then we got our rejection candle, yeah, fine, give it a shot. And sometimes it will fail, huh? It's not 100% strategy. I'm just showing you in the last week. I take these all the time. Here's actually a trade I took on futures. You can see, open happens, we move up, we pull back, I take the buy from the lows to the high. It's the same concept that I actually use in my own trading, not just something that is useless per se. Okay, so this is the way I use open range breakout. I know it's a very popular topic here, and honestly, there are many profitable ways to trade it. So many people have different opinions about it, I find, on the internet. I'm here to share mine, not to tell you what's right and what's wrong. I'm here to share experiences, not opinion. I share what works for me, what I've used to pass funded accounts, what I use to trade on a daily basis when I'm trading, and why. And it is very, very, very profitable for me, and I've done extremely well doing it. And yeah, I think for the last quarter, we're holding above the 88% win rate, which is insane. Now, I don't expect it to always hold that much, but it's very nice to see. Make sure you leave a like and subscribe. Follow along for more content. Be part of the journey. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.